Welcome back, everyone, to Equity Development. My name is Paul, and I'm delighted to speak to Jonathan Hunter again, acting CEO of Eleco PLC, a leading build tech software firm that helps property developers and owners design, construct, and manage their portfolio of assets over the sort of 25 or 75-year lifespan of property. So welcome, Jonathan.
Good morning, Paul.
Big congrats on this morning's positive trading update. I saw that profits had increased at least 10% on a relatively sort of flat sales, but with sort of top line momentum sequentially from H1 into H2, and cash really strong, coming in at 6 million by the end of December compared to 1.1 million 12 months earlier. So can you just quickly walk us through top level how that resilience has been achieved, and what you're seeing at sort of the grassroots with customers at the moment?
Yes, well, I'd like to take the opportunity first to thank all my colleagues, because without their talent and effort, we wouldn't deliver the results. But also, we did see Q2 the impact of COVID on our face-to-face services, primarily training and installation services, and there was some pent-up demand which we received in the beginning of H2 and well, actually throughout H2. So we saw some recovery in our services. We're still providing and delivering services virtually, but we've improved and continue to improve the way we deliver services. So we're seeing those revenues recover. And we've maintained our customer base. We've also added new customer names to our accounts. So something we're very good at is retaining customers and growing within our existing customer base. And customers love us. They love our product, love our services, love the brand, and they stick with us. So that's certainly supported the recurring revenue.
Yeah, and I think what's really interesting, it's just on strategic sense, is such that even though you've had relatively flat sales coming at around about sort of 25 million for 2020, that really masks the growth in recurring revenues and SaaS, because it's been sort of like impacted by the more one-off or face-to-face training revenue. So you've got quite a lot of momentum moving, not only from sort of like quarter on quarter and half on half, but you've also, your top line is being driven by, more valuable and strategically important SaaS and recurring revenue streams, it seems.
Yeah, we have seen, with COVID, customers are looking at collaborative tools, cloud hosting, hosted systems. So we have seen more interest and some more demand as well in hosting. So SaaS, that's supported the SaaS and recurring income.
Well, I think didn't you buy Icon about 3 or 4 years ago, Jonathan? You were responsible for it. So that was sort of creating the SaaS seed within Eleco. So you've certainly got the technology and the platform to be able to really accelerate that. Because, I'm guessing, I don't want to put words in your mouth, etc., but I'm guessing COVID's been a short-term impact, but actually for the whole digitization and cloudifying of build tech going forward, that's got to be a tailwind for that whole sort of recurring revenue SaaS platform that you and your team have created.
Yes, yeah, I can say in the period, well, in 2020 we invested in our cloud hosting services, so the infrastructure, hosting Icon and Shire system with the same provider, with a view to obviously with scaling.
Yeah.
So we do have customers, more and more customers that are taking out the hosted option of Shire system, for example.
And the Shire system's the maintenance one, is basically asset maintenance.
Yes, asset maintenance and management, and also facilities management.
Great, fantastic.
So we've seen an uptake there with hosted Shire systems increasing, and thankfully we invested in the infrastructure at the right time as well, despite a year of certainly overhead control to ensure stability and cash generation as well throughout the year. But we did continue to invest.
Yeah, and I'm guessing sort of like now the you know, you sort of the recurring revenue streams is given where it was about, I think it was about 53-54% last year, must be higher percentage this year, I guess, sort of over 55% of recurring revenue streams as the grow. Yeah. Okay. Well, you know.
Yes.
Yeah.
Yeah. We're looking at.
And what about geographically? Is it sort of like a third, 2/3, a third UK and sort of like 2/3 overseas? Is it? So you've got sort of like a good geographical spread.
Yes. Yes. Yeah.
Brilliant. And
Sorry, it's good.
what about the US now? I've seen old Joe Biden. He comes in. He's going to be inaugurated this year, and he's sort of like the way analysts are and the industry sort of experts are saying he's going to have a $2 trillion+ infrastructure bill in the Senate and in Congress approved as soon as he hits it hits Washington. So I mean that's going to be a huge growth driver potentially for the whole build tech industry out in the States, I guess.
Yeah, so I think certainly it's not only in the UK. Outside of the UK, we see opportunity.
Yeah.
And in the period, actually, I appointed a couple of key roles. One is a head of sales in the US, to support that growth. So certainly, we see the opportunity there. We primarily sell through a reseller channel in the US. But it's an area where we see growth opportunity.
Yeah, and I'm guessing, I mean, it's going to happen. I mean, usually whatever starts in the US sort of like comes over sort of westwise to the UK first into Europe. But I mean, equally to jumpstart the economy after the terrible pandemic, you know, and we get sort of mass vaccinations, they're going to be an infrastructure. Well, I know Boris has said boom, boom, boom infrastructure, hasn't he? Sort of like for next year. What that means, we don't know. But it's going to be building bridges, mending, sort of like, you know, electrification, all the sort of like the traditional infrastructure that, again, so won't happen just in the States. It'll happen presumably in Western Europe as well.
Yes. Yeah. And we've got a good spread of customers across, you know, construction in general, from main contractors that are working on infrastructure projects, but also house builders.
Yeah.
In the UK. So we're quite well positioned to take advantage of where the market is going.
Yeah. Well, you've been keeping the cards fairly close to the chest in terms of your growth strategy, but I have a big favour for investors. I don't suppose you could just whet our appetites, could you? Just to give us a sort of quick glimpse before the strategy about where you're sort of like hoping to put some investment, whether it's going to be, I don't know, cross-selling new products or M&A or what, organic growth, or how do you see that sort of like panning out?
Well, it's been really exciting to revisit our strategy, and you know, in light of, you know, COVID and a challenging year, there's so much opportunity for us. So really, the strategy is around focus on our customers, you know, our core customer segments, our products that meet the needs of those customers, and also the people within the organisation to ensure that, you know, we're well positioned to deliver growth.
Yeah.
So, you know, it's all of those things. I think that we see a lot of opportunities, as you've highlighted, you know, in the past.
Great. And when do you hope to unveil the growth strategy? Is that going to be a sort of a Q1, or are you going to wait until the prelims?
So yeah, we're announcing our prelims, you know, in a similar timescale to previous years, not last year because COVID had an impact to the timings, but you know, it fits quite well with announcing our plans for strategic growth.
Yeah, and with your sort of £6 million in your back pocket, what are you going to spend it on? Are you going to look at acquisitions, or are it all going to be internal sort of like organic growth?
Well, we're looking at everything, Paul. But you know, it's around focus. You know, it's around focus again. What will deliver, you know, the best return on investment and shareholder value, and that's really, you know, we've gone into detail, quite a lot of detail in the strategy to identify those areas of opportunity that are going to deliver the best growth.
Great, fantastic. Well, we look forward to that one. Now, I won't put any numbers in your mouth because you know, you're going to reveal all that sort of like your growth strategy. But I would point to investors just looking at the industry and the sort of the dynamics, and it's about an $8 billion euro type global industry, growing at sort of like 10% per annum, according to sort of, you know, your big peers. And your peers like the MEMS check are on about 9 times sales. You've got Autodesk, and you've also got Bentley Systems on well over 10 times sales. And likewise, Schneider Electric bought RAB Software for 5 times sales during the depths of the pandemic. So it just gives you that kind of multiple that investors can think about if the company can, you know, sort of energize its top line. And currently, Eleco is trading on 2.5 times sales. So you've got a great opportunity here, I think, Jonathan, to get some sort of, like, if you get the top line growth, you'll get multiple expansion. And I'll just put again another wetner for investors. If we can double the top line from 25 to 50 million over the next 5 years, which I would certainly hope that would be achievable from a combination of organic and M&A growth, then you get a 25 million market cap, say 5 times sales times 50 on a less than 100 million shares. So you get £2.50 shares. So there's plenty of sort of things to think about there, I think. Great. Well, you know, in terms of news flow, as I say, the next one is going to be the growth strategy and the prelims. Yeah, I guess.
Yes, yeah, prelim results and strategy.
All right. Well, you've certainly whetted my appetite. So really look forward in speaking again in 2 or 3 months.
Yes, likewise, Paul. Thank you.
Thank you, Jonathan.